What's up, everybody? I'm Jay, DCA Adventure, back again, and today we are going to do a video on charting a bunch of altcoins. I've asked the Patreons and guys in DCA Adventure Discord to give me a list of coins that they wanted charted, so we're going to go over that today. But guys, if you like our content, please like, subscribe, hit that bell for notification. I'd like to do a couple shout outs. HyperTrader, link for them guys will be in the description. Go trade on one of the fastest, easiest trading terminals where you're able to trade multiple exchanges, multiple different assets, and chart everything all in one place. They are definitely awesome. I've been trading a lot of altcoins over there. Very, very convenient. So go download their app, their trading terminal. Like I said, link will be in the description. Also, guys, if you want some DCA swag or cryptocurrency swag in general, go over to DOGELord.com, use coupon code free shipping, and you will get free shipping inside the US on your order. High quality merchandise, DOGELord.com. So he'd very much appreciate it if you guys go check it out. You got some pretty cool wall murals too. I'm going to be moving soon, so I'm going to be looking into getting one of those. Guys, this is not financial advice. Trading is very risky, especially leverage trading. Very, very quick to make money and very quick to lose all your money. So you need to have a proper trading plan, learn how to use risk management, and just get yourself a good mentor. And by joining the Patreon group, getting into the DCA Discord or the Crypto Mentors Discord, you will be able to find what you need over there. If you want access to DCA trading script, DCA trading bots, or the private room that we have in the DCA Discord where we're posting market signals and general market talk, got quite a few guys in there posting charts and doing TA, so thanks guys for the help, I appreciate it. But in order to get that stuff, you guys have to join the Patreon group and you have to join my tier, Trading with the View, and by doing that you will have access to all that stuff. $25 a month, guys, is pretty cheap to have all of those trading tools and people there to help you. All that stuff for $25 a month is pretty good, so a lot cheaper than a lot of other places that you go to. And guys, I am making flashcards in a little test for the Patreons. They see it first, and then I do end up posting out into the Discord for everybody to take a look at for free, but the Patreons do get it first. I'm doing these little flashcards, and right now I have just one little set made for how candlestick work and general candlestick patterns. Link for this will be in the chat, so look in the chat. I'm posting it right now. But go over here, check this out. These are flashcards. It's called cram.com. And this is DCA Adventure Learning Candlesticks. And basically you can go on here and you can click on flashcards, you can do memorize, you can do test, and you can do games. All these tabs work. If you don't want to read, you can hit the speaker over here on the left of each square, and it'll read it aloud to you. But these are good to look at and to take the test and do the flashcard part of it. That way you get used to seeing this stuff. If you are in a general habit of looking at this every day, eventually it's going to get burned into your head, and when you are charting and doing your own technical analysis, these things will jump out at you. That's what I try to do at DCA Adventure. I'm not trying to hold your hand and tell you when and when not to trade. I'm trying to teach you to rely on yourself, and when you think it's time to trade, not to trade. I mean, obviously, we do market signals and stuff like that, but the general goal is to get you where you can do this on your own by yourself. So I want to teach you the basics and teach you some of the major do's and don'ts and how to use risk management, stuff like that. And doing these flashcards is a way of doing that. But you can see here it goes over the first general description of a bearish and bullish candle, the open, high, close, the wicks, what all that means. And then you can see here we got all kinds of different chart patterns and the definitions, and you can go through and read all of these. That's the flashcard part of it. You want to do a test of it, you can click on test. Okay, so choose the matching letter. It's not going to let me do it because I'm on my account that made it, but I think we can go over here and check out the memorize. So click the space bar or the button, and basically this is showing you what the picture is, and you need to say what it is, and then you'll just click the answer button. So you know, we got a bullish candle. That's the high, the close, the open, and the low. Lower wick, that was the lowest price of the candle. This was the highest price of the candle. This is where we opened. This is where the candle ended up closing. And same with over here. And then obviously you'll click it. You'll read the definition. If you got it right, you're going to click got it right. Now, guys, yes, you can go in and click you got it right every time, whether you did or not. You know, that's up to you if you are going to take it serious or not. Like this here is bullish engulfing. Yep, see, I was right. Bullish engulfing pattern. So you'd click I got right. This is a bearish engulfing pattern. And you can see that, you know, you got your green candle, and then the very next red candle engulfs the entire green candle. So that this makes it an engulfing candle. So bearish engulfing pattern. Answer, that's what it was. I got it right. And then see, you can just go through this, and it really helps, guys. I definitely recommend doing it, and I will make more of these as time goes, and we'll have a decent collection. I would really like to get on making a course. I'm gonna have to get some people to help me do it, though. There's a certain way I want to do it, so be looking forward to that in the near future. It'll probably be something kind of like this, where you can take tests, you can do a memorize game, and little stuff like that. I think it's easier to learn that way. That's over there on cram.com. Like I said, look in the chat right now. I'm posting links for this, so you can go check it out. Alright, guys, we're going to get right over to the charts. Let me see here. Now, I got a list here of what I'm going to try to chart. I only got an hour, so probably we're going to try to do this quickly. But we have ETH, XMR, BYND, Verge, XLM, Digibyte, Bitcoin Gold, I think that is, not sure, XTZ, ARC, and AUNT, VET and ADA, DOT and Bitcoin, Zcash and Zen, Celsius and Zelcore, Zel token, Crow, and Litecoin. So first we're just going to start off with Big Daddy Bitcoin. And this is something I wanted to show you guys, a decent little strategy here of, you know, when should you be buying the dip. And this strategy goes for long-term traders. You know, you're not going to be doing a million trades a week or a month or even a year doing this strategy. But if you would have followed this strategy, you would have bought the dip, the right dip, every time and been making nice profits. So, my damn green screen keeps screwing up. I don't know why it's doing that. Sorry about that, guys. There's a little light up top. I am using a DCA background, though, pretty sweet. But, alright, guys, this is a Brave New Coin index, what I look for, looking long-term on Bitcoin, any higher time frame charts. And what I have here is the 21 exponential moving average. Now, if you want to pull this up on your indicator tab, you will need to go into your indicators, and people think that you put EMA. Well, yes, that gives you a whole bunch of exponential moving average tools that other people have coded and made. But to get to the exponential moving average, you have to put MAE in. Okay, so moving average exponential. And then you're going to want to click that. And in the settings, you're just going to work it just like we do the rest of our moving averages. You'll just go into your little setting tab. Your style, I made this one purple, made the line big. For my input, you're going to put 21 and then just click OK. But how this works, how you want to run this strategy is if you let's just not even say you're leverage trading, you were spot trading, and you were wanting to buy the dips. Well, the key is to buy the right dip, because sometimes you may buy the dip and then the dip goes lower and dips even farther down, and then now you're losing money. So there's a certain strategy, and by using exponential moving averages, this is a very good way to do it right here. So the basic strategy of this is you want to trade the higher highs and trade the retracement to the 21 exponential moving average, and you want to be looking at this on the weekly chart. This is preferably where it works the best. This is where I would trade it. But what you want to do, so let's say we were back here, so we have a higher high here. When we retraced back to the 21 exponential, you should have bought right here. Okay, and then we go up, and you only want to do this when we have the higher high and then the retracement. You always have to be careful though. If you buy at the retracement and you buy down at the 21 exponential moving average, you want to put a stop loss below it. A lot of times if we dip below it too far, it will dump way far underneath of it. So we got a higher high here, then we retraced back to the 21 exponential moving average, we would have bought. Waited, higher high, we kind of retraced back, we got close. That damn flies. You could have bought here as soon as you would have seen the deviation away from the 21. So like if we had this big green candle, then we had a bearish engulfing candle here, but then we had another green engulfing candle, and this is actually a bullish sign here. And when this happens, and as soon as we would have deviated and made that higher high there, you could have bought on that candle. Even if you bought up here, you still would have been good. And then here's an example where we get to the higher high, we get the retracement back to the 21 exponential. You said, okay, good, we got it. You would have caught a little play off of that, because then we would have dumped. As long as you would have left your stop loss underneath the 21 exponential moving average, it would have gotten you out. You would have been okay there. But as you go, okay, so now we hit the 21 exponential moving average. You could have taken a profit there. Down here we bottomed out, we came back up, we touched again. Now this would have saved you a ton of money if you wouldn't have bought anywhere through here while we were underneath the 21. You only want to be looking to buy when we are above the 21 moving exponential moving average. So as you can see, we get to the 21, we break it. We didn't set a higher high quite yet. Right in here. Well, I guess you could have said this was a higher high from down here. So let's say you were looking from down here, we broke. This would have been a higher high. We retraced back to the 21. You bought your dip. We went up. Retraced back. If you'd have been paying attention and you'd have been able to see the bullish engulfing and the deviation away, you could have got it. Them are kind of hit or miss. So up here we make a higher high again. Come back down for the retracement to the 21, and you could have got a little bit off of here. These are weekly candles. They don't look like big moves, but them are decent if you're leverage trading. So you could have caught a little bit here. But then again, we break right back down in it, so you got stopped out here. You wouldn't have bought anything here. So now we're back down here at the low. We break the 21, we make a higher high. We retrace. Boom, we break through it again. So you would have got from there to there, and you always want to try to take your profits. Once you get a decent deviation in there, you want to be looking for profit taking. I know my chart looks kind of crazy with all these drawings, but so we're back over the 21. We didn't make a higher high, but if you consider from down here, but if you're looking over here, we didn't. but you're down here, make a higher high, we retrace, you bought the dip at the 21, we come back up, took your profit, we retrace again, you bought the dip again, up here now we're making higher highs. This is the present, we're making higher highs, we retraced back to the 21. As long as we respect that 21 and we hold it there as support, guys, we're buying the dip here. Okay, we got 3 days and 3 hours left in this weekly candle, so it's a pretty good strategy. As long as we hold, I definitely think that we're going to see another jump up. But if you guys were watching last week's video, I told you about the M pattern that we were looking at. Okay, and so far it's playing out. We did take a short in the Patreon group right at the top of this thing. We were right in here around $12,100. Did nail a pretty dang good short. Again, I took profit early. But we're looking at this weekly exponential moving average. We need it to hold here as support. And you can draw a support line right across and see that it's lining up just perfect with old resistances and old supports. So if that doesn't hold, then expect to see we're going to probably drop back down to the $8,800, $8,900 area, and then lower and lower, you know, just stair step our way down. For this M pattern to complete itself, we would need to see a drop back down to at least $6,500 area, $6,400 area. So it's there, just something to be aware of. But that is a strategy you guys can use on the weekly. I'm gonna get rid of. Oops. And you guys can see that we are testing the 21 week moving average. The exponential works a little bit better, trying to play that strategy where every time we retest, you get the higher high and retest. If we're not getting the higher high, guys, don't buy the dip. If you're looking over here, yes, we're at a new higher high. Looking all the way over here, no, it is not yet. But from this point on, this is a higher high. We did get to retrace, so it's very possible we bounce here and we try to break through that 12.3, 12 to 12.5 area, and that's where we want to see if we want to get back to 14,000, and then obviously break there for all-time high. It's possible. I think we could do it. Bitcoin's been doing some crazy moves here in the last few weeks, so only time will tell, guys. Watch these moving averages. It's very important that you have these pulled up on a daily and a weekly chart. They're going to give you a lot of information. If we break those moving averages, and if we close below them moving averages, Bitcoin's just going to keep going down. You guys know that I'm a big trader with the moving averages, so we're just going to, we do break that 21 week, be looking down for the 50-day at the $8,800, $8,700 area. It's very, very possible. The 200 week, said in all the videos, we very rarely test it, but when we do, we've bounced both times so far. So if we do happen to drop all the way down to 66, 67, hopefully we bounce there. That would be the complete M all the way. So we'll see, guys. We'll see. We can take a look at the 1 day. Now, does look like we got a bear flag forming. Okay, so here's our post, and here's the flag. So we could end up just taking another drop down and get to the 200-day moving average at 9,000 area. We did get a bearish cross here of the 21-day and the 50-day moving average. So it is very possible, guys, that we do drop even farther down. major support at the $10,000 area. So as long as it holds, you know, we should be okay. But you guys got to remember that every single time we test this support area, it's going to get weaker and weaker and weaker. We don't have buyers down there forever. So as we come down and we test it and we're taking out buyers, eventually no more buyers left, and then the floor falls out. Super big area of support right at that 200 day moving average at the $9,000 to $9,100 area. Major support, guys. If we do make it down there, which I do think that it's possible, we can't close below that 200 day moving average. If that happens, we're definitely going to go sub 9K. We don't want to see the 50-day moving average start curling down and pointing towards that 200-day. We don't want to see a death cross. Things could get very bad with Bitcoin. So let's go over to the list. Well, we're going to do Litecoin real quick. I know Gundy wants Litecoin and Crow. So Litecoin's pretty much like looking like the Bitcoin chart. We do have bear flag on the daily. We did get a 21 cross under the 50-day moving average. Typically we do dump there. A lot of times when we cross like that, we do get a small pump, then the dump, and vice versa. When it's bullish, we'll get a small dump, then the pump. So just something to be aware of. The 100-day moving average is acting like resistance right now, right around $49, $50. So we gotta hold. We gotta hold here, guys. Major area of support down at the 42 to 41.70. So that would be the lowest that I would be looking at. Worst case scenario. Short term, I mean, it could always be worse, but very ugly head and shoulders, guys. I don't know if anybody's seen this. We were talking about it in the Patreon channel in the DCA Discord. It's ugly, but it is there. Showed you guys how to measure these. Get your neckline in there, take a measurement from the neckline to the top of the head, bring it back down to the neckline, and that'll give you a roundabout measurement of the drop. Major resistance back up at the $55, $56 mark. So that's the place to get back to. Expect a hiccup there on $56, $57 area, or where did I say, $54, $55 area, all the way up to 57, you could say. From 54 to 57 is going to be a tough area to break. Going to need a lot of volume, ton of buyers to break back through there. And even at $50, a little bit of resistance starts around $50. So, and that's kind of where we're testing right now. If you shoot your line over, see, your old support becomes new resistance. So always be looking left on your chart, guys. If you're laying out support and resistance areas, these are going to help you and give you areas of where you can be buying, where you can be selling, where you should be taking profit. All right, let's look at Crow. Crypto.com coin. Guys, use my link. I do have a link for them. You'll get $50. You do have to stake it. Crypto.com to US dollar. Not very much info there. There we go. So for Crow versus the US dollar, calculated by TradingView, can see here we are getting the 2150 cross under, which is bearish. Using that 100-day as support at 14 cents. Definitely could, you know, everything's going to look the same for the most part on the daily here, where we got the bear flag. So we shall see. We shall see. If we do break here on this moving average, there's really nothing to hold us. We got little bits of, we like down around 13 cents. Might stop for a brief second. But really all the way down to right around the 9 to 7 cents before any significant support. So it may be time to cash out on the crow and buy the dip on that. We should let's take a look at it on a weekly. And to get down to the 21 on the weekly, be right around the 12-13 cents. So that would probably be where I'm looking at to buy crow if I was going to buy it. Obviously you can put a stop loss right below that 21 and then be looking for your 50-day. This is how you want to see these moving averages. You want to see your 21 and your 50 on top of everything else on every time frame, especially your higher ones. I only trade the higher ones with the moving averages, but you know, if you every time we come for the retest of that 21, you could buy there. Same with the 50 every time we make the retest of the 50. So that's giving you two opportunities of buying. You just have to watch them and put your stop losses in there and risk properly, and you can come out victorious. So very good strategy. Again, down by the 12, 5, 13 and 7, 8 cents be buying opportunities. Financial advice. Let's take a look at Zell. Alright, Zell core to Bitcoin. When Mikkel said that this was one of the ones that he was looking at and wanted to chart, I went ahead and just did the daily for him, messaged him, said, hey, right now would probably be the time to buy if I was going to buy. This is the exact chart I showed him. None of this green stuff was here. It was all red candles. I said, well, you can see here on this last down channel we had a nice breakout. Here we go, nice down channel, same thing. If he would have bought down here when we said, he just had a nice gain with Zell. I probably would have taken profit at my 21, or would have been looking to take profit. And then obviously at the 50, and right now it's testing off that 50-day moving average. So take profit here if you bought this, or at least take half profit. Not financial advice, but usually I like to see a rejection off the 50-day, at least on the first attempt. Is where I like to do most of my shorting when I go in heavy. Even that 21-day, I'd have been looking for the short and put my stop behind it. I would have got stopped out on that 21-day, but I would have hit my 50-day and would have killed it on a shorting position right now. So keep that in mind, guys. I probably wouldn't buy anything or do anything with it right now. I would wait. If we make a break above that 50-day moving average and we close above it, then yes, I'd be looking to buy there again. So, and I told him when we were talking, it looked like it bottomed out, you know, because I mean, this is all the information we have on Zell. And back here at 270 sats, we came all the way down and hit 277 sats and then made the bounce. So let's take a look. We're going to look at Celsius real quick. Celsius on the day, we are getting a bullish cross on the 21 and 50. So this is a no trade zone for me. I'd probably sit and wait and see what's going to happen. If we can get a higher high than 502.502, so a little over 50 cents. If we can get a higher high above that, then I'd be looking for the long. But this is one of them BART patterns. You know, I'd probably be looking for a short opportunity right now. I probably would have been taking profits. This is right around 48 cents. Like I said, if it breaks above 50, then good deal. But I'd definitely be looking for a retest back down to the 41 cent, and then possibly down here to the 100-day, and we do have a very significant amount of support down there around 37 cents. So that's pretty good for sell. I like Celsius token. You can kind of, how we were talking about the exponential moving average and the 21 weekly, and how we look for the higher high, wait for the retest back to the 21, buy the dip. This strategy can kind of work on a daily chart with just a regular 21. It's kind of how I long and short, and it only works, you guys know this, when the 50 and 21 are on top of all your other slower moving averages. So make a higher high, we retest back to the 21, you bought the dip. Make a higher high, retest down to the 21, you bought the dip. Higher high, retest to the 21, bought the dip. Made another higher high, came down for the retest, it broke underneath. So you would have not bought anything from February to May. And then you guys can see that we make a higher high, haven't retested, make a higher high, retest back to the 21, you buy the dip here, and that's where you know, you got to learn where to take profits. So anywhere where there's resistance, and the higher the time frame, the stronger the resistance. So you could have looked left on your chart and seen that we had resistance here, we had resistance starting over here. So I'd have been looking to take profit, retest back on the 21, we break below it, we come back up, we break back above it, higher high, we're right at double top, damn near perfect, retest of the 21, you buy again, long position again, higher high, retest of the 20. So always be looking at resistance in your layers, so that way you know when you should be taking profits. I always watch for the deviation from the moving average, and once we get pretty far away from it, that's where I'm looking to take my profit, or any significant area of resistance. Let's look at Ethereum. So in the Patreon group, we were talking about head and shoulders and how sometimes some of these head and shoulder patterns can do the opposite of what they should do. And you know, I said, hey guys, there is a head and shoulders here. Be watching. I said, regardless of what happens, I think I had a breakout trade set up, and I do believe it was on the 1 hour time frame. But I said, you know, you'll get a head and shoulders, you're expecting a drop, and then all of a sudden it does a dumb pump on you. And we did have that happen day before yesterday on Bitcoin and Ethereum, when we were ready to trade the breakout. Going through, I posted the signal, still looking at the chart, you know, made a couple notes, told the guys, regardless of what the head and shoulders looks like or whatever, we're just going to trade the breakout here. I have seen these things do the complete opposite, and they make a big move upwards. And not even 15 minutes after I said it, that's what happened. It made a nice move. The breakout, it broke down first, so I ended up trading the downward movement. I shorted it, and then it turned right back around as I was moving my stop loss down in profit. It came back, tagged me out, and then went up on its own and had a nice pump. So I let my asset gain value for me naturally, and on the way down, so I made money the whole time, which was nice on that move. That's kind of how I like to do it anyway. But here on Ethereum, we are testing that 50-day moving average, getting ready for a bearish crossover with the 21. So again, guys, I would have shorted that 50-day moving average. Perfect play. You would have got it in at right around 380, and right now you would be sitting around, is it about 365? About 359, 360. So that'd be a hell of a gain on Ethereum, and we are sitting on some decent well, yeah, it's a decent amount of support right here. So we'll see it if it breaks any lower than this. Be looking for it to break back down to at least the $315 area, right on top of that 200-day moving average. And I said in last week's video, or last Friday on the live stream, that I felt we would see a $300 Ethereum again, and I seen a couple people in the chat laughed at me, and what do you know, we broke all the way back down to around 307. So awesome. I wish I would have been around and been prepared for that trade. I don't trade Ethereum all that often. But we are hitting some nice resistance too here, right around 380. So I don't think it's going to break. It never usually does on the first attempt on that 50-day moving average, and especially if we're going to get the bearish crossover. So something to keep in mind, guys. If you watch my videos and you're still not putting these moving averages up on your charts, I don't know what you're doing, because you would be learning a lot, and you'd be able to pick this up in a couple weeks and be like, oh man. Especially with the breakout trades. Breakout trades are super easy. You don't have to be right going up or down. Normally, whichever way they break, 80% of the time they go. Sometimes they come back in. That's why we use stop losses. Let's take a look at the list, see what we have on there. Let's look at ADA. See what it looks like on the weekly. Oops. So on the weekly, we did test that 21 moving average. As you can see, the 21 crossed over the 50 week moving average, which is super bullish, and it did get to pump straight up all the way up to almost 15 cents. Damn. Came back down. That's pretty good support right around the 10 cent down to 8 cents. A decent area of support. If it breaks down even more from there, guys, be looking for that 50-week moving average right around 6. I wish it would go back down to 6 cents. I'd buy more. I hold just a tiny amount of ADA. I'll go over to the 1 day. Yeah, it's not looking good. Probably test that 21-day moving average right around 10 cents again. Decent area of resistance at 10 cents. They're all 9, right where we're at. So almost 11 cents at that 21 day. And we're looking at 12 cents at the 50 day. Which I'd be looking for the 21 first. If I was going to short this, I'd probably be looking for the short right here at the 21. And then I'd try to short it again at the 50, right around the 12 cent mark. Be looking for that breakdown though. We could break all the way back down to that 200 day right around 7 cents, 8 cents. DOT. USD. Not very much on the daily. Let's see if we can find different. .USDT. Not too much. That's not the... I'd be looking for at least a test of the $5 area again for a short opportunity. $4 is very good support for DOT. Not very much information on it. It's pretty new. Here's a little more. Let's just check a 1 hour chart. So here we did get a nice head and shoulders on the 1 hour. There's your shoulder, there's the head, there's the shoulder, and a dump. Here's the shoulder, there's the head, there's the shoulder, dumped. So we're following this trend line up. You know, we retest and we break underneath this trend line. I'd be looking for the short on DOT, or take your profit, get out of it, buy back later. Not very much information, like I said, guys. It's a new asset. Now looking at it scrunched in like this on an hourly chart, we could almost say, well, hell, it's pretty close to a cup and handle. And if this ends up what plays out, it's going to go much lower. I see a couple different variations of things. You know, we could say there's the shoulder, here's the head, there's the shoulder. It just all depends. These are little things that you guys will pick up on and learn. You know what? We better chart the Doge. Let's go to the 1 day on the Doge. Dang it. Dang it, I do it every time. So again with Doge, we got a bear flag on the 1 day chart. We did get the bearish crossover of the 21 day under the 50. We did get the dump from that. We're getting 21 is going to cross underneath the 100. Using the 200 moving average as support, and that is right around the 0.0026. I would be looking for a retest of at least the 0.0030. And then from there up to the 0.0326. If you could short Doge, them are the places to do it. If you're looking to buy the dip, let's go over to the weekly chart. And it is underneath the 21, so I wouldn't be buying no dip right here. We're using this as resistance right now. Be looking for this to reject here. If it does reject here, this would be a perfect place to short Doge if you could. Back down to the 50-day moving average, 0.0025259. Decent resistance at 0.0031 all the way up to 0.0033. XLM, stellar lumens. I like stellar lumens. Weekly, same thing with stellar. It is it broke below the weekly, came back up as a retest, and so far it is rejecting there. Perfect place to short. Looks like maybe the start of a head and shoulders pattern. Here's a shoulder, there's your head, and another shoulder. We haven't made the other shoulder yet, so something to keep an eye on with stellar lumens. If we do break this, be looking back up here at the first area of resistance at 0.9, and you can see it's a big area. We got 0.9 there, and then another area 18. So 9 cents is pretty decent, and then there's not really nothing in between there to stop it. Anywhere from 17 up to 20 is a very easy reach for Stellar. There's nothing there to really block it. As long as we don't break back underneath that 50, we'll be good. We need to stay above that 50. We need to stay above 6 cents in order to keep going. We do break down and we go back down to 6 cents. That's right over here. We do got a little bit of support. Other than that, I don't have any more information, so I can't tell you how much lower. Pro Litecoin dot VeChain. Alright guys, I wish I could do more. Well, let's get one more in there. Let's do get some Verge in there. I haven't seen Verge or talked about Verge in a long time. Looks like it hasn't really been doing much for a very, very long time. So we did get a bullish cross, 21 cross to 50. It is testing the 50 using as support 0.004. Good buying opportunity here. Got to get a break above 0.00546. We get to break above it. We get a close above it. Be looking to go higher. A decent area of resistance. Starting at current where we are at right now and testing all the way up into the 0.007. So if you're holding Verge, watch. Here's one of the classic M patterns. This is a perfect way of how I trade them. Perfect example. Where in the heck did my paintbrush go? It's a 3/4 M, so you get an M, come back, came up only 3/4 of the way, and go. When I trade these M patterns, I usually try to short that first 3/4 attempt, because a lot of times that's where it fails. And if you look left on your chart, you can see that we do usually have resistance in that area. So I always try to short the 3/4 part. I've had guys in the Patreon ask, why are we taking a short? We're not a complete M. And that's my explanation. A lot of times you'll see the M, and it only goes up 3/4 of the way to the top before rejecting and coming down. And if we break lower than that, then the next area for Verge is 0.0032. Which is very possible, but as of right now, the 50-day is, or 50-week is acting as support. But alright guys, I hope that I went over enough of your coins. I have a meeting here in a little bit, so I don't know for sure if I will be there to premiere the video with you or not. Hopefully I will. But if I am there and you have a coin on there that I missed or that you really, really wanted to be charted, hit me up in there, or you could always send me a message on Discord. I'll be more than happy to put together a chart for you real quick, send it over to you. Especially if you're really considering buying or selling, and you want another opinion on what somebody else would do. Hit me up. I like doing that kind of stuff. So, but guys, check out cram.com. Go look at the flashcards I made. Go hit up HyperTrader. Hit up DOGE.com. please like, subscribe, smash that bell for notifications. Remember, guys, every Friday we have a live stream. We give away free Bitcoin. Who does not like free cryptocurrency? So with that being said, guys, I hope you all stay safe, wash your hands, have a good night.